Welcome to the Susan Brender Show. It's all about you. Featuring shows on health and wellness, the performing arts, politics, and people who inspire you to be your very best. And now, here's Susan Brender.
I'm Susan Brender, and this is the Susan Brender Show. Today we have a guest who's been on our show before, who gave us so much information that we got requests for him to be back on our show, and I'm so happy to have him, and his name is Aman Raina. Now, let's just talk a little bit about Aman. Aman is an investment coach and a founder of something called Sage Investors, which is a financial education company that works with individual investors to improve their financial literacy and behaviors toward money so that they can become successful investors on their own. And so, he's got a lot to talk about today because so many things are happening in the market as a result of Mr. Trump being our new president, and I want him to tell you what his ideas and thoughts are on where we're going on moving forward in this economy. Okay, so first of all, let me just welcome you again, Aman Raina, to our show, and I'm just so pleased to have you.
Thanks for having me, Susan.
Well, it's my pleasure to say the least. Now, let's just talk about the stock market in general. Since the stock market has gone up since Trump was elected. What do you perceive for the rest of the year? I know that's a very broad question, but you must have some thoughts about that, don't you?
In terms of where the market is going, the easy answer is I have no idea, because to predict the future is hard, next to impossible. However, we can make some educated guesses. And one of the things I do as an investment coach is I don't tell people, like, okay, this is where the market's going to go. I work with them to kind of formulate some ideas and think through possible scenarios of how things could evolve and what those impacts could be in terms of making investment decisions. So, the big question that we get right now, the markets are, since the election, since we last spoke, the markets have continued to surge, and we're now, we're living in a world where the Dow Jones Industrial Average is now over 20,000, and that's a big milestone. So the market, if you're asking where the market is, where it is right now, it's in a very happy place. It's a very good place, and I guess the sentiment right now is a couple of things based on the outcome of the election and sort of expectations for this administration. Is really focused a lot in terms of the spending. And as we've heard endlessly, Mr. Trump has talked endlessly about doing, basically opening up the taps and spending like crazy on a variety of things. Infrastructure and defense seem to be the big items. And so I think that's really what's gotten the market pretty happy or at this point, is because when you kind of think through what that means is, okay, if you're going to spend more money on defense and you're going to spend more money on building out your infrastructure or repairing your infrastructure, walls or no walls notwithstanding, that's you think that through, and that seems like that's good. It's going to create more jobs for people in the short term, and if people have more jobs in the short term, then there's more consumption going on, and if people are consuming more, then businesses are going to be more profitable, and ultimately that's good for stock prices, right?
Right, of course.
So that seems to be right now the mindset, is that the expectation is that his administration is going to deliver on a variety of stimulus kind of initiatives.
Something, Aman. Some people are forecasting a significant correction, and for the rest of the year, and others are forecasting continuing expansion. So, what's your thoughts about that?
Well, again, if you're looking short-term, if you're looking at a short-term view, it's really about trying to mind map this whole thing, and it's about kind of playing out scenarios. So we just looked at spending, the whole spending dynamic of what a Trump administration could do in the short term. There's a couple of other elements that come into play in terms of trying to formulate your understanding of what the business environment, because at the end of the day, this is what we're trying to figure out, right? What's the business environment going to be? Is it going to be conducive for companies to create products and services that are going to be profitable and are going to create value for us? So a lot of what what you try to have to do with it when you're making an investment decision is it's not about buying stocks at the end of first off, it's about understanding the business environment. So, we talked about spending. We try to, we just did a mind map there of mind mapping a scenario how things could play out. Let's look at another hot button issue that's out there and that Mr. Trump seems to be tweeting about endlessly, which is trade.
Yeah.
Basically, since the election, since he's taken office, he is pretty much on record and committed to breaking a lot of or renegotiating some various trade agreements. NAFTA is the big one. He's indicated, he's signaled that he's going to pull out of the TPP agreement, which is a big thing with the Asian market. And the general tone that seems to be coming out of Washington now is a much more protectionist viewpoint.
Right.
In terms
Let me
of,
interrupt for a second. You just talked about the Trans-Pacific Partnership. Some people, particularly Trump thought it wasn't good for the U.S., but most economists disagree. What's your take on that? I mean, because let me say that we've been doing trade with so many countries that have been good for us. I mean, we're talking about the Asian markets, and the Asian markets with China, with Vietnam, with Thailand, various places like that have had an impact on us. So what's your take?
It's about, the thing is that we've really enjoyed a lot of benefits of having a very open, dynamic trade environment, and we've allowed good, not necessarily, it's not about goods and services flowing efficiently around the world. It's about capital. It's about money flowing around the world. The U.S. has enjoyed an incredible period of low interest rates. A great reason behind that is other countries around the world have been investing, have been buying a lot of government bonds and keeping interest rates quite low. And that's really because of this open trade environment. But now, if the dynamic is about, becoming more insular and looking out for personal interests, I guess, local interests, right, taking a more local approach on it, that's going to have issues, and that is going to create a lot of in the short term it might be great because if you're you might be keeping more jobs in the country, and again, think it through, you're going to create more. If you can create more jobs in the country by being more protectionist, then you're going to stimulate more consumption, which is good for the economy, which is good ultimately for profits and ultimately good for stock prices. That's a short-term benefit again, and that seems to be again why are the markets reacting so positively right now? It's that short-term mindset. But then as investors, we're also investing for long-term, and so we need to understand what are the long-term implications for this. So if Trump goes ahead and adopts a very protectionist policy with other countries, Mexico is right now the flavor of the moment right now, and issues tariffs, border tariffs, taxes, and stuff like that on goods coming into the U.S. Well, I think right now he's making the assumption that if the U.S. were to sell goods outside in the rest of the world, that the rest of the world wouldn't counter and issue their own tariffs and taxes and stuff like that.
Now,
so what you're getting at the end of the day is potentially an issue where you might have costs go up, prices go up for things we consume on a day-to-day basis. Inflation. We haven't had much inflation. We could see a heck of a lot of inflation down the road, and that's not great for ultimately interest rates, which we haven't talked about yet.
Now, hold on a second. Let's talk a little bit about Trump's wanting to withdraw from NAFTA, saying it's a bad deal. What's your opinion on that?
Well, again, I'm not a trade expert or anything on this, but what I know is what the whole principle behind NAFTA is to allow goods and capital to go to places where they are managed more efficiently and can be used to generate goods and services more productively. And so what NAFTA, you can ask 10 people, they'll give you 10 different opinions. NAFTA, and basically any free trade kind of agreement where you have a free market kind of system, is more conducive for capital to be allocated more effectively. And when your capital is allocated more effectively, you produce higher quality goods and services. And more importantly, bringing it down to day-to-day living, your quality of life should be a lot better. So that's what free trade is ultimately about. That's what open markets are all about.
Yeah. Let's talk a little bit more about Trump for the moment. First of all, I want to go back to Obama for a moment, too. And did Obama really create a problem for us with regard to trading? And, he had a lot of open borders. Now Trump is closing all the borders. So the question is Trump getting a raw deal because there were problems during the Obama administration, or is he just a what should we call him? No, he's not that positive. But what would you say is Trump's take on things compared to Obama?
Boy, well, it's about ideology, really, right? What's his ideology? And his ideology is about he thinks that the U.S. is getting the short end of the stick on everything, pretty much, in terms of trade, in terms of security, in terms of, I guess, security, not necessarily with the, our borders here in North America, but just security, from geopolitical, other, Middle East and all that other stuff. And he's just, it's almost kind of like circling the wagons and saying, you know what, like, we're getting a bad deal and we have to take care of our house. And that's, if we take care of our house first, then we'll deal with everybody else.
Yeah, now there's also an issue that people are thinking about and talking about, and that has to do with buying real estate. Okay, there was a time where real estate was a fabulous investment. Now they're saying that there may be inflation. So the question is, if there is inflation, and I want you to also define inflation for our audience because some people really don't understand that. But what about the opportunity? Is there money to be made in real estate?
Well, let's start with inflation because that kind of feeds into real estate. Inflation is really, the cost of, we'll give you the ivory tower definition first. Inflation essentially is, the rate of change in the price of a basket of goods and services. And so every year you look at the price of that basket, and if the price of the goods in that basket go up, that's inflation, the percentage change. So it's just about price increases. And then conversely, if prices go down, then you have deflation. But we've been living in an inflationary world for pretty much all of our lives. So the key thing to understand that and how it feeds into real estate is if prices are going up, inflation is going up at a pretty rapid rate, like 2, 3, 4%, that increases basically, it creates a bit of price uncertainty. And when there's uncertainty in pricing, the risk of doing business goes up. And when the risk of doing business goes up, that feeds into this thing called interest rates. And so if inflation is going up, by default, interest rates go up accordingly. And so answering your question, real estate has been such an attractive investment in the last decade or even longer because we've been living in a very low inflation, low interest rate world. But now, bring this back to Trump, if he adopts a much more protectionist policy, and which is more conducive for inflation to go up, well, follow it through. If we're going to be living in a world where goods and services are going to cost a lot more, that's going to be higher prices, higher inflation. That's going to feed into borrowing costs and higher interest rates. And if interest rates start going up aggressively, then does real estate become an attractive investment opportunity? The answer would be no.
Right. So that's going to have an impact on people who are involved in building homes. That means contractors. That means stores like a Home Depot where they sell all kinds of products for construction. It's going to have an impact on so many different businesses because, building houses, building buildings is really very important for our economy. So you're saying that there may be a stop for a little while, or is it going to be a long time until we see that real estate's going to go up?
It's really all about the deal with real estate is really about the interest rate environment. If the cost of borrowing is low, then the cost of, carrying mortgages and, debt to finance construction, finance the ownership of property are going to go up. And then on top of that, that's just on its own. Let's layer on top of the fact the economic environment. If unemployment is high, if people are losing their jobs and are unable to make mortgage payments, that feeds into it also, right? So that's another dynamic that kind of feeds into the whole real estate side of it.
Right. Now, again, a lot of people watch TV, and when they watch TV, they watch many different shows on CNBC and various Fox and various other stations. And when you listen to the people who talk about money, they talk about finance, should you trust them? I mean, this is something that I'm interested in knowing.
Oh, boy. Well, you have to. Okay, it's interesting you say that, because one of the things I do coach people to do is how do you consume information that's around you? We're getting blitzed with it now, right?
Yeah.
As you said, like there's on TV, business media, business print, internet, like blogs and Twitter and everything.
Right.
It's just we're inundated with a mountain of information. For the average investor, it's extremely overwhelming. So one of the things I coach people to do is to how to filter. Like, how do you sit down and watch something on CNBC or whatever? Pick a financial channel.
Right.
Because there is a bit of theater going on in here, and you have to understand. Like, if you're want to make long-term investment decisions, putting on a business news channel which is focused in watching shows like, Fast Money and, Kramer and all that stuff, who are really thinking minute to minute in terms of their investment decisions,
right,
is not going to be conducive for how you're going to make really good investment decisions.
Yeah.
Having said that, there are interesting things that you can pick out of watching a CNBC that can actually identify opportunities for future investment. And a lot of it revolves around, contrarian thinking. So actually, when I watch CNBC, I don't watch it a lot, but when I do, I'm actually more focused on listening to what people, not what they like, the stocks that they want to buy. I'm interested in what they don't like, because those chances are stocks that are not, forget about the stocks, I'm interested in the companies, because chances are those are really good, well-run businesses. It's just the stock price is garbage. But I'm investing for a long period of time, so I may want to start looking at some of those companies.
Mm-hmm. Yeah. Now, I want to finish on something, and that is, are you optimistic or are you cynical about what's going to happen during this Trump administration? And do you think it's really going to help people just grow and get, make very good investments? What is your feeling? I mean, are you optimistic again, or are you a cynic?
Two different questions. Well, if I'm optimistic on right now, I've been quite pessimistic on stocks in the last while because of this. I've felt that interest rates have been artificially low, but that dynamic is now kind of off the table now, and it's really, really about the dynamic of what Trump is going to do in terms of establishing the business environment. And so the real question is, he's outlined some things, and knowing his personality, we know how he thinks, we know his personality, it's very volatile, and in the short term, it might work. Things might be fine. The big question is really with respect to implementing the things he's talking about, is whether he can actually do it. And as much as he's the president and he can write pieces of paper saying these are executive orders, you have different levels of government, right? Mm-hmm. You have legislative branches of government, which right now are all Republican, but there are a lot of people in those Republican Party that are kind of moderate and may not hold all the values and beliefs that Mr. Trump does. So the question is, can he actually implement any of this? Is he going to get shackled? Mm-hmm. And right now he's gone in with elbows up and like a bull through a china shop and saying, hey, I'm going to disrupt the whole damn thing. And the question is, can he actually do it?
That is the big question.
So if we get a sense that he cannot do it, then interesting enough, then what you have is gridlock. And if you have gridlock, that means status quo. And businesses love status quo. And that's usually good for stock prices.
There you go. Well, we're going to finish on that note, Aman, because there's so much more that we need to talk to you about. We really have to give Trump a chance. I tell everybody, even if you didn't like him, even if he was, some people said, oh my God, Trump is going to really make a mess of things. He's going to defeat Roe v. Wade and various other things, which is not your, part of what you do. But the reality is that we need to give him a chance. And in a couple of, let's just say that in a couple of months, we start seeing various things happening, whether they're good or bad. I want to invite you back to talk about whether he's done the right job and whether we will be able to appreciate what he's done. So I want to thank you, Raina. And Aman, just so that everybody knows again, that Aman is an investment coach and founder of Sage Investors, a financial education company that works with individual investors. Aman, it's been a pleasure to have you on the Susan Brender Show. You're just full of all kinds of information, and people love it. So thank you again.
No problem.
Thank you for listening to the Susan Brender Show. To be a guest, email sebrender@yahoo.com.